Hey, economic warriors, buckle up. It's your boy, the boss of economics, here to slice through the government's latest economic circus with the precision of a Wall Street hedge fund manager shorting a failing retailer. Today, we're diving headfirst into the Trump-Vietnam trade deal, a spicy cocktail of tariffs, transshipping, and geopolitical posturing that's got the mainstream media drooling and the average Joe scratching his head. Is this a masterstroke of economic strategy or just another government-induced recession waiting to happen? Spoiler alert, the government's fingerprints are all over this mess, and I'm here to call it out. Let's start with the headlines screaming across your feeds. President Donald Trump, the self-proclaimed dealmaker extraordinaire, has inked a trade agreement with Vietnam, just days before a looming deadline, July 9, 2025, that would have slapped even higher tariffs on Vietnamese imports. According to Trump's Truth Social post on July 2, 2025, the deal imposes a 20% tariff on Vietnamese exports to the U.S., with a whopping 40% levy on goods deemed to be transshipped, those sneaky Chinese components slipping through Vietnam like a teenager sneaking out past curfew. In return, Vietnam has allegedly agreed to drop all tariffs on U.S. imports, opening their market wide open for American goods. Trump's crowing about it like he's just invented sliced bread, claiming, "We will be able to sell our product into Vietnam at zero tariff." Sounds like a win for the U.S., right? American consumers get cheaper Vietnamese sneakers, and U.S. automakers get to peddle their gas-guzzling SUVs to a country where the average person earns $4,500 a year, roughly 1/20th of the U.S. per capita income, per the latest IMF data. But hold up, economic warriors, because the devil's in the details, and this deal reeks of government mismanagement, geopolitical grandstanding, and economic distortions that could push us closer to a recession. Let's peel back the layers, from the surface flash to the deep, dark economic underbelly. First off, let's talk tariffs. Trump slapping a 20% tariff on Vietnamese exports, which sounds like a tough guy move to protect American workers. But here's the dirty little secret the government doesn't want you to know: tariffs are a tax on you, the consumer. According to a 2024 study by the National Bureau of Economic Research, U.S. consumers bore over 90% of the cost of Trump's earlier trade war tariffs with China, adding roughly $1,300 annually to the average household's expenses. Now, with Vietnam as the sixth largest supplier of U.S. imports, shipping $137 billion worth of goods in 2024, per Census Bureau data, those tariffs are going to jack up the price of everything from Nike sneakers to Gap hoodies to Lululemon yoga pants. And don't be fooled by the stock market's knee-jerk reaction. The S&P 500 might have spiked after Trump's announcement, with apparel stocks like Nike and Lululemon hitting session highs, but that's just Wall Street's short-term sugar high. Long-term. Higher costs for consumers mean less spending power, and less spending power means slower economic growth. The U.S. economy's already teetering on the edge, with GDP growth slowing to a measly 1.8% in Q2 2025, per the latest BEA estimates, and now the government's brilliant plan is to slap more taxes on the stuff we buy. Genius, folks, pure genius. Now, let's zoom in on this 40% tariff on transshipped goods. For those of you not fluent in trade jargon, transshipping is when companies route goods through a third country, in this case, Vietnam, to dodge tariffs or quotas. Trump's top trade advisor, Peter Navarro, has been frothing at the mouth, calling Vietnam essentially a colony of communist China, in an April 2025 Fox News interview. The administration's obsessed with cracking down on Chinese components sneaking into the U.S. via Vietnam, and they're willing to burn bridges to do it. But here's the kicker: is this really about protecting American jobs, or is it just geopolitical theater? Vietnam's exports to the U.S. have surged 35% in May 2025 alone, as companies race to beat the tariff deadline, and a big chunk of that growth comes from manufacturers shifting production out of China. According to a 2024 report by the U.S.-China Economic and Security Review Commission, Vietnam's trade surplus with the U.S. hit $122 billion in 2024, making it the third largest globally, behind only China and Mexico. The government's response: punish Vietnam with tariffs, even though it's a key strategic partner in countering China's influence in Asia. This is classic government overreach. Instead of fostering economic alliances, they're alienating a crucial partner and risking a trade war in Southeast Asia. And let's not forget, the higher tariffs on transshipped goods are going to hit American companies hard. Take Nike, for example. Over 50% of its footwear production is now based in Vietnam, up from 30% a decade ago, per their 2024 annual report. If those factories get slapped with a 40% tariff because of a few Chinese shoelaces, guess who's paying the price? You, the consumer, and Nike's shareholders, who've already seen profit margins shrink under Trump's earlier trade wars. Now, let's talk about Trump's grand vision of flooding Vietnam with American SUVs. He's hyping this up like it's the second coming of the Model T, claiming on Truth Social that the SUV, or, as it is sometimes referred to, large engine vehicle, will be a wonderful addition to the various product lines within Vietnam. Oh, bless his heart. Let's break this down with some cold, hard facts. Vietnam's per capita income is $4,500, according to the IMF's 2024 estimates, and the country's transportation market is dominated by motorcycles. Over 90% of households own one, per a 2023 World Bank report. Meanwhile, the average price of a US-made SUV, even the cheaper models, starts at $30,000. That's nearly 7 years' worth of income for the average Vietnamese citizen. Compare that to competitors like Toyota or Hyundai, which churn out compact, affordable cars tailored to emerging markets, and you've got a recipe for a big, fat nothing burger. Oh, and let's not forget the US auto industry's own struggles. US exports to Vietnam were a measly $15 billion in 2024, and auto exports made up a tiny fraction of that. Meanwhile, the US auto sector is grappling with a 15% decline in domestic production in 2024, per the Bureau of Labor Statistics, thanks to supply chain disruptions and soaring input costs, problems exacerbated by, you guessed it, government mismanagement of trade policies. But sure, let's pin our hopes on selling gas guzzlers to a country where scooters reign supreme. Brilliant strategy, folks. Here's where it all ties together. Economic warriors, the government's obsession with tariffs and trade deals is a one-way ticket to recessionville. Let's look at the data. The US economy's already on shaky ground, with consumer confidence tanking to its lowest level since mid-2022, per the Conference Board's June 2025 report. Inflation still stubbornly high at 4.2%, Bureau of Labor Statistics, June 2025, and the Federal Reserve stuck between a rock and a hard place: raise interest rates and choke growth, or keep them low and watch inflation spiral. Now, throw in Trump's tariff tantrum, and you've got a perfect storm. Higher tariffs mean higher prices, which means less consumer spending, which means slower GDP growth. And don't forget the ripple effects. Vietnam's not just a supplier of cheap sneakers, it's a key player in global supply chains. Disrupt that, and you've got a domino effect across Asia, potentially dragging down growth in economies like South Korea, Japan, and even India. The IMF's latest World Economic Outlook, July 2025, already warns of a synchronized global slowdown, with global growth projected to dip to 2.8% in 2026, and that's without factoring in Trump's trade wars. But hey, at least the government's got its priorities straight, right? While the economy teeters, they're busy greenlighting vanity projects like the Trump Organization's $1.5 billion luxury resort in Vietnam, complete with golf courses and 5-star hotels. Because nothing screams economic recovery like a playground for the ultra-rich, built on the backs of taxpayers and consumers footing the bill for higher tariffs. So, what's the takeaway, economic warriors? This Trump-Vietnam trade deal is a textbook example of government mismanagement masquerading as economic strategy. Tariffs are a tax on consumers, transshipping crackdowns are geopolitical theater, and the SUV fantasy is a delusion of grandeur. The government's meddling is distorting markets, alienating allies, and pushing us closer to a recession, all while claiming victory on social media. Here's my advice: if you're an investor, short apparel stocks before the tariff pain hits; if you're a consumer, stock up on cheap sneakers now; and if you're a voter, hold these clowns accountable. The government's got no business playing economic chess when they can't even handle checkers. Stay sharp, stay skeptical, and remember, the only boss you can trust is right here at Boss Economics World. That's all for today, economic warriors. Smash that like button if you're tired of government bumbling, subscribe for more no-nonsense economic takedowns, and drop a comment on what economic mess you want me to tackle next. Until then, keep fighting the good fight, and keep your wallets out of the government's sticky fingers.